Hi, good evening, everyone. Welcome back to the channel. So this is going to be our first video that we've ever had on GPTY, the newest YieldMax weekly dividend fund. So GPTY is quite cleverly named for like ChatGPT. You think about literally the letters G, P, and T are in the fund ticker symbol. So the genius of J and company never cease to amaze me. So this fund is fairly new, but it's already begun paying some eye-popping dividends. So we're going to go over these. We're going to compare the spreadsheet that we're going to do is going to compare LFGY to this one. Oh, welcome. We have an Andre sighting on. We got to do part 2, by the way. Let me know if you're down for that tonight. Okay, so let's do a quick screen share here. Let me go over the specs of this fund, and then we're going to go over the spreadsheet. Okay, so for the distribution schedule, as we know, it's weekly. So if we go here, it's not anything to do with A, B, C, or D. It is, of course, weekly. So let's go down here and pull it up from the ever-growing list of YieldMax funds. So GPTY, here we go. It's got a distribution rate right now of 36.44%. It's called the YieldMax AI and Tech Portfolio Option Income ETF. GPTY is an actively managed ETF that seeks current income and capital appreciation via direct investments in a select portfolio of AI and tech companies. So this is very important, folks, this distinction here. Okay, it's directly invested in a select portfolio of AI and tech companies. So it's not a fund of funds. It's not investing in the dividend equivalents of these companies, but rather directly in these companies. I like this a lot. In fact, I may buy this fund myself, in full disclosure. So AI and tech, what companies are we looking at when it comes to this? Right now, we've gotten 3 dividends, and they've been pretty consistent. February 5th was our first date, February 12th, and then the 19th, with pay dates of 210, 214, and 221. The first dividend had a different day because it was so new. It didn't get paid. Oh, because of well, that would have been on my birthday actually. It was paid Monday instead of that Friday. Anyway, it was 33.5 cents, and then it was 29.36 cents, and then 32.6 cents the week after. So pretty consistent. It's in that 30 cent range. And the schedule for the weeklies, the schedule is actually right here. For weekly, it is basically, I mean, as we know, every week. So the next one's on the 26th, March 5th, 12th, 19th, 26th. February and March tend to follow the same schedule because the months are back to back. So you'll notice the dates are like say Friday the 7th will be the same February and March. Like the Fridays, they kind of line up because of the way the 2 months are, because February is only a 28-day month. But anyway, let's see what we got here. Awesome. So far, all our comments are coming from Andre here. So everybody else, feel free to chime in. Okay, so now that we know this, let's go look at the performance of the fund. So we're going to go to Seeking Alpha. Hopefully, we'll seek some alpha on here. So YieldMax tends to be starting most of their funds on a $50 scale. So let's go over here. GPTY. We're going to compare this to a benchmark like the S&P. Okay, so it's down to 46.50, so we are seeing some NAV erosion. It's been trading so far since, let's see, let's go over here. It looks like it was January 23rd. So literally 3 days after the new administration came in. It's already down 7.16%. Let's go over here and look at total return. So total return is going to be over here. Total return, and we've got still a negative return, but it's less so. Let's look at historical prices here. So we have seen, this is what it's closed at. So it's already traded for almost a whole month. It was 49.83. It got up to 50, and then it stayed in the $48 range. Went up to 49.10 here, 49.11. Then it started dropping a little bit last week, and then it closed. This is actually the open. I'm sorry. These are the closings. 49. We were last at 49.07 on the 10th. We're at 46.50. So we've lost like 350 so far. Okay, folks. So now what we're going to do, let me get this up on the laptop over here. So we're going to go to the spreadsheet, and we're going to look at all the dividends, put them in there. So let me do this over here, go back to the spreadsheet over here. We're going to share this one. Okay, so we're going to go off the same tab that we started with LFGY, LFEGI. Let's effing go, as they say. And we're going to use this to compare these two, because so far these are considered the yield max portfolio ETFs. We've got a crypto portfolio one, we've got an AI and tech one. Okay, so obviously GPTY is the AI and tech one. I also would like to go over some of the underlying holdings. We've got NVIDIA, C3.ai, Palantir, Apple, Meta, Snowflake, Microsoft, AMD, Broadcom, and Alphabet, to name the top 10. Okay, now, so I've got the dividends up over here. So what we're going to do is this. Pretty much recreate the same one, and this is going to move a lot quicker because we only have 3 weeks here. So I'm going to name this tab. What do you guys think we should name this tab? So LFGY versus, it's pretty self-explanatory, right? GPTY. There we go, right? Okay, so we're going to take this, going to make it 3 weeks here. GPTY. Okay, so pretty easy. We can pretty much copy and paste the same formulas over here and then just input different numbers. Take this formula because it's pretty much the same. So literally this is just going to be, we're just overwriting what's already here. And then we're going to come up with our final verdict here. So we're going to compare, I'm going to start calling this a hypothetical portfolio of $200,000 invested equally between these two funds. And so it's like a competition, which fund is doing better. One obviously has a head start. One obviously is paying better dividends so far. Okay, so our first dividend was 0.3353. Our second dividend was 0.2936. Our third dividend was 0.3258. So that's here. Over these last 3 weeks, we had, it was a holiday last Monday, so we had 5, 5, and 4 for trading days. These should have automatically populated. Yep. So there we go. This one needs to be fixed a little bit. This one should only include B11 to B13 and then divided by F11. So we have to impute the starting share price. So ignore this one for now. This is just a simple average of, it should be D11. It should be D11 to D13. So here we go, $1.38. This one needs to be probably fixed a little bit too. It's going to be E11 to E13. And then now for the big one, we go to Seeking Alpha here, or actually I like NASDAQ, NASDAQ.com. Let's go over here for GPTY. We're going to take the closing price that it was at, and that's what we're doing now to make it more precise. We're taking the closing price each day on the ex-dividend dates, basically. So the key dates we're looking at here, let me close this. It's the 19th, the 12th, and the 5th, the 12th, and the 19th. These are the 3 dates we're looking at here. Okay, so we're looking at stock price history. And we're going to go year to date. And so February 5th, we have a closing price of 49.07. February 12th, we have a closing price of 48.51. And then this last Friday, it fell all the way down to 46.50, but we're not taking Friday. We're actually taking the 19th. So the 19th, we were at 48.37. Okay, so the average price, let's put a dollar sign in front of that baby there. Average G11 to G13, 34%. And then we're going to be taking F13 is correct, but it's minus F11 and then divided by F11. So price change, we've dropped 1.43%, 100,000, that doesn't change. Let's do this here. Let's move this over a couple decimal points. See, I told you all this would move quicker. Okay, so now for our verdict over here, weekly income Week 1, our weekly income would be $683. Week 2, $605. Week 3, 673. What this column means over here, this is if you were to put $100,000 into this fund at this price, this would get you 2,038 shares, rounding up. At this price, it would get you 2,061. At this one, 2,067. And then there's our weekly average is 654. Annually, this would pay out 35,000 in week 1, 31,000 in week 2, and then 35,000 in week 3. So now we can look at these numbers here. The net realized return so far after 3 weeks is a 0.5%, which is not great. For this one, we're going to take B14, we're going to add H14, and then we're going to divide by 3. So it's a 0.17% weekly return. So this isn't too good, actually. Also, the market's been very volatile so far this year. It's frustrating. Me personally, I think it's time for Papa Powell to go. We'll, at the very least, have a new Fed chairman next year. But that goes without saying because his term is up. So, as far as our final verdict here, LFGY is doing much better, but it's got 5 weeks in. It's paying a much better dividend. They both have NAV erosion. This one has about, from this spreadsheet, $1.35 of NAV erosion. Let me see something here. Did I do this right? Actually, the original price should be 50, but we're going by what it closed at in week 1. Okay, so we are seeing NAV erosion. We're getting a much better dividend here. The dividend's like double. So it seems like your money would go a lot further so far in LFGY. Let's go back to LFGY for a second and try to figure out. Oh, you see this here? So this isn't good. It's a projected minus 64% return. So right now, this one actually has a positive return because LFGY right now, I think, you know what, this is a little bit misleading. I think I need to just use $50 because I think it shot up at first. So see, that changes the whole equation there. I'm just going to put 50 for both of these because that's what these start out at. I'm going to make a judgment call here. So in this case, because of the NAV erosion here, this would make this negative. See how that number changes? Anyway, so that's roughly what we're looking at for these two. Let me know what you all's thoughts are in the comments here. We have somebody called My Dream Come True, and it's actually my dream come true that you're on because you're a new person to find me. And that's always my dream, right? And looks like you have a nice, pretty picture there. And you gave me a wave, so that's nice of you. Westchester L. Charleston Dixon Cathcart II. That name is a mouthful. You said, I've given thought to creating a portfolio of weekly payers and having it drip for a year or more to see how well it compounds. GPTY is definitely worthy of inclusion along with YMAX, LFGY, QDTE. Why include QDTE there? Now, I am overdue for a video on QDTE, XDTE, and so on. I'll be doing those soon. As far as this video, that's pretty much going to do it. Let me actually make this bigger so that you all can see. Sometimes some of you say that the screen is blurry. So right now we have the luxury of making this bigger because we haven't filled this up yet with nice numbers, but pretty soon it'll be full, as you all know. Well, anyway, folks, hey, thanks for tuning in. I want you all, if you would like to like, comment, and subscribe and join Discord and spread the word. Let's keep this community growing, make this community great, and we will see you all in the next one. Take care. Good night. Bye.